Sanjiv Bhasin joins us now. Let's connect with him. Let's talk stocks. Let's talk markets. Good morning, Bhasin Saab.
Good morning, Nikunj.
How are things? What are you telling your clients? Is it time to buy? Do you think worst of the price action, worst of the global sentiment, that's all behind us?
Yeah, good morning, Nikunj. I think we are fairly overdone on the weakness of the sentiment, and I have not seen such a weak sentiment since COVID. In fact, firstly, let me wish all your viewers and all of you a very, very happy Navratri and whatever way you celebrate. But we think that this could be a turning point. We are very sure that the front flow to China and other markets has played out. Three things in our benefit: low oil prices, the dollar becoming very weak, and bond yields. Now, the uncertainty on the rate and so on will continue, but the bond yields and the dollar are telling you that most of the fund action may be over with. And I think that India's underperformance now will start to see better realizations that quarterly results come. So definitely overweight India, and we think now this 16,800 is held out well. In the next 2 days, I think we will take out 17,200, and I will be very, very surprised at the expiry we see, because there is considerable amount of short position on the market, which can see a lot of covering and buying on value buying in the next 3 days.
Give us an example.
Hello?
No, I'm saying, can you share an example with us when you say that you see considerable amount of buying as value has emerged in the market?
Yeah, so look at the PSU pack. I mean, everyone was chasing State Bank at 600. At 510, I think this is a steal. Same as the case with another PSU bank like PNB or a Can Bank. All will report record profits. Yield softening is a plus for them. And plus, look at the macro environment. They are all seeing, if I could hear Mr. Dinesh Kare, he said no impact of growth. In fact, the rural markets have started to see very, very strong growth. And I think banks are a proxy to that. Look at a stock like LTIM, the Mindtree L&T investment. I think their guidance is extremely positive. So, and if IT is going to play a catch-up, then LTIM or an HCL Tech can be outperformers. Look at stocks like JSW Steel, which I think can be a very, very big outperformer, given that coke prices have softened and a weak dollar means China demand will give them a real impetus. Look at stocks like Escorts, where again, Kubota is now signaling that they are going to get more market share from Mahindra. And I think that this whole dialogue on drought and all is overdone. I think Escorts will rule the roost. If you are a long-term investor at 13 times, you're getting an MNC. And last but not least, Brokerage consumer product. I think that is shining its way through the glory. So these 5-7 stocks are looking outperformers. On top of that, I think the Nifty itself is giving you a very, very good entry point.
Okay, that's the view, Sanjeev. Meantime, Naresh, I wanted to get in your take as well on some individual stocks in today's trading session, and just going by what we saw play out yesterday among the large caps, you did have a lot of those banks come under pressure. SBI, Kotak, IndusInd Bank, for instance, HDFC Bank as well. If you had to just handpick your top 3 banks, PSUs, private banks, mid, small caps, what would they be?
So, in the large caps, I would continue to stick with Axis Bank and ICICI Bank. Those two have created a retest move wherein they retested the last major breakout points and now are starting to make a comeback. And a good enough correction has taken place. So 950, 970 Axis has come down to 810 to 850 band. ICICI Bank similarly has made a move from 950 down to 830 to 850 band. Now, a retest of the last major breakout is done. These two could continue to lead on. In the PSU banks, it is SBI. The stock has corrected. It is back to that 500 and 520 mark, which is where the last rally started from, and corrected from 600 odd levels. And second would be going with Canara Bank in the PSU basket, which is again a stock which has shown a lot of relative resilience over the last 1 year. So that has also corrected from 340 to 270 to 80 band. And in the mid cap and small cap, it continues to be IDFC First Bank and Federal Bank, which continue to show longer term charts to be positive.
Okay, stay on with us. Let's take a look at the newsmakers. HAL's OFS, that was opened yesterday for non-retail investors. It was subscribed over 4 times on day 1, and the OFS will open for retail investors today. Let's get in Sharath. He joins in with all those details. Sharath.
Well, yes, important update coming for HAL's OFS, and of course on the end of day one, the overall subscription stood at 4.51 times, and this is coming in for the non-retail investors. Today, the issue will be actually opening for the retail investors, and the company has exercised its right for the oversubscription. Now going ahead, the company will be actually going for an OFS of 3.5% stake with a floor price of 2,450 rupees. Now stock itself, if you look, yesterday the stock did fall by almost 5% as the OFS had opened, and if you see over the last 1 year itself, the stock had a magnificent run with almost 78% gains. Now do remember that the stock is in FNO band today. Apart from this, what's the post OFS impact? That is something which you'll be watching out for, and this also includes that the stake sale is expected to increase the free float in the market, which includes the public shareholding going above the 25% mark. Apart from this, the important thing is the adjustments in the MSCI would be there, with an inclusion expected with a cut-off price coming down to 2,150 rupees from 2,650. Now because of this, it's expected that the brokerages are expecting that the inflows are expected to increase to the tune of $195 million from the $155 million mark.
All right, thanks very much, Sharad. That's HAL in the spotlight. Sanjiv, meantime, wanted to get in your view on some recent brokerage notes that have come out. PB Fintech is actually on Morgan Stanley's radar. They've upped the target price. It's 810. They're seeing further scope of re-rating, saying that adjusted EBITDA is going to be the key metric. Do you like PB Fintech? Do you like any other stocks within New Age Tech?
Yeah, good morning. So, Avan, some of these baskets are looking good, particularly Paytm and Zomato, and like you said, PB Fintech, but your duration has to be longer. However, in the near term, when I'm getting SBI at one-time price to book, and in this fear psychosis, all banks giving you an entry point, I would rather put my money in the near term in some of the banks, and I think that they could yield faster. But like you said, some of these fintech companies, if you can allocate 2-3% of your capital and save put for the next 2 years, then you will definitely see some return which is greater than the market. The issues are that at this time, there are enough bargains available in the market on fully transparent earnings and so on, and you would rather stay with them for the short term.
So if you could highlight some of the names, I know you're being selective. I know you're saying that it is better to put your money in other avenues, but if you could highlight which ones you like.
So, Aman, I'll give you 6-7 names. LTIM is my top pick, that is LTI Mindtree. Then I have SBI, Can Bank and PNB, which Nuresh also suggested. These are very good stocks to buy. Escorts, like I told you, Kubota's gaining market share 13 times 1 year forward for an MNC. JSW Steel is another very, very big pick, and Kotak Bank in the large cap. But my dark horse play, last time I was on your show at 270, 280, I told you SW Solar. SW Solar is the largest EPC player in the world. It is the sole agent for providing EPC and MEP for any solar panel and PVs. And Reliance Energy now has a 40% stake. I just had a conversation some time back with the management. They had an order book of 800 crore till last year. This year they are executing 4,000 crore. And by next year, it can even touch 10,000 crore. They have a margin of 11 to 12%. So you can imagine the bandwidth this stock has to create wealth. It is just an 18 crore equity. Reliance Energy owns more than 40%. And if you do your homework and sit still for 1 year, I can guarantee you this year it will be a doubler.
Sanjiv, hold on to that thought. I have many more questions about Sterling and Wilson, which I'll just come to in just a second. But here's an ET Now exclusive. Sources are telling your channel that TPG Global plans to exit Campus Activewear by selling its entire 7.6% stake via a block today. Pankaj is here with more details.
Absolutely. As you are saying that TPG, which is one of the first investors in second round of investors, in Campus Activewear, after 1.5 years of listing, has decided that it's going to sell its stake. Yesterday, it opened a block for investors where they could bid. It's a small block, 800 crores, about $100 million is what the total size is. But it's a big one in terms of the total percentage, about 8%. JM is the sole banker to the deal. What I'm also picking up is that 345 is the floor price to this particular offer, which means a good 6-7% discount to the current market price is what they are actually offering. TPG was the second round of investor, and now they have decided to do this, to sell out of this particular Campus Activewear.
Right. Sanjiv, to the point that you were making on Sterling and Wilson, the stock has already appreciated 78% in the last 52 weeks. At 310 thereabouts, can one make a fresh entry at this current juncture?
Yeah, good morning, Aisha. You're seeing from the lows. The issue came in 2019 at 750 rupees. So it's far cry from just its issue price. And now it's not Shapurji Palonji, it is Reliance Energy. They've cleansed the balance sheet and they've said there are no domestic, there are no in-house orders in this 4,000 crore. It's all external. Now look at Reliance's foray into PVs and so on, and what they've assured in state government meetings, and that's the future. So even if they get 40% more orders from their parent company, you can imagine the book. But the problem is there are fixed costs of about 360 to 400 crores, which will be, which are there as a recurring cost, just as in any industry you have. If they can order book, which they are doubling in the next 2 years or 3 years, the future is solar panels, and that energy as a whole is going to be, and you need someone to do the EPC or the MEP, that is the maintenance, electrical, plumbing, and the EPC business. For that, there is no other company in the world better than SW Solar. I am looking for a target at least of its issue price of 750, and then we'll take it from there. I know it's bold to say that at this time, but we'll see how it plays out over the next, over this year.
50, that's almost double or more than that actually, but that was the issue price. The stock currently at 310. Kunal, not as actively tracked, but I don't know if you're looking at the charts of Sterling.
Oh, don't track the stock as such, Aisha, so won't be able to offer any comment.
Sure. Okay, let's look at some of the other buzzers from yesterday. And Balrampur Chini surely was one such case in point. 375 on the stock price right now, 3% higher. Sanjiv, still got conviction on the sugar story?
Well, yes and no. They keep giving you the entry and exit points. The stocks have been multi-baggers, and we know that in the soft commodities, sugar has been in a very sweet spot. Also, given the outlook on the weather and some of the things, I think the prices have gone up. So Balrampur Chini, DCM Shriram, and EID Parry on any decline would be biased. But look for slightly longer term. Don't play the weather patterns, because our seasonality, will see quarterly performance being affected by that.
Okay. Meantime, yesterday you had something like a JK Tyre which shot up. Spark as well saw a nice double-digit gain, and BEML featured on the radar. Naresh, let's get in a quick view on the charts of these smart movers.
So, say Spark has made a single-day move. It's been in a downtrend for quite some time. A single-day move, and the spike actually fades off for the stock. In between, also the stock had spiked from 200 to 225. And then we ended up at 160, 65. We've spiked up to 180 today. But the stock has gone nowhere for the last almost 3 to 5 years now. The stock used to be 160 back in 2014 also. So technically, very tough to take a call here. The trend continues to remain weak. Not trying to play the bounce back here just because of a one-day move.
Sanjiv, what's your outlook on the entire healthcare space? Do you believe that one really needs to be very selective, largely due to the commanding valuations, US FDA concerns that pop up now and then? Or would you have a sort of a blanket positive stance?
Yeah, good point, Avan. See, they've underperformed for a long time after the COVID abated and so on. But if you wanted to pick, particular stocks in your portfolio, then I think stick with the large caps. Dr. Reddy and Sun are two large picks. Lupin has always flattered to deceive, but now the management seems very keen on increasing market share. Their generic pricing are improving, and I think they've been through a lot of the problems. So at 700, I think that gives you a very good risk reward. But the whole essence is, Avan, do you want to be in defensives or do you want to be in active trades? I can assure you from here, the Indian markets are looking very, very upbeat for some more, time-bound correction. But next week onwards, I would expect the outperformers to be banks, metals, IT, and auto, because that is where the consumption basket lies. We are in the Norata periods, and that March onwards, the festive spending and the buying in the new year will be very, very huge. We've already seen that softening of commodity prices are going to be anti-inflationary, and that could see even the central bank like RBI actually take a pause. So I'm very bullish on the entire, high beta space like banks, auto, IT, and metals.
That's quite interesting and leaves us with a plethora of options to buy into right now. HAL, that's the other stock that I just want to, pick up in trade. While it's surely gained about 78% since last year, the stock fell a good 5% yesterday. yesterday. Now, the OFS update has come in. The OFS has got subscribed on the first day. That's the non-retail portion at about 4.5 times. The OFS is going to open to retail investors today. Sanjiv, subscribe or not?
100%. I mean, you can't have a better play than HAL and BEL and a Bharat Dynamics, and defense is here to stay. As a disclosure, we've been long on the stock all the way from 1250, 1300. It is a doubler, but we still think there is miles to go, given the balance sheet, given the order inflow, and now given the outlook that India is ready to do something for people like, countries like Israel and so on. And I think defense is a must-have. Only the valuations were a little discomfort. Now, I think this overhang of the OFS will be over, and sooner you'd see at least a 20% gain even from these prices.
Kunal, are the charts reading the same? A 20% gain from the current levels for HAL?
Well, I think it's come back into a good buying zone. I would say that from earlier levels of 2,800, 850, almost a week and a half out back, it's come back towards a good neutral territory as well as a good support zone. 200 DMA is also very, very close by for the stock price. We've seen how most of the defense names have taken a pause or a pit stop at this 200-day moving average for few trading sessions or few weeks. As the case may be, and then these stocks have seen a good uptick. So I think in that regards, possibly the stock may come back towards a good support point, which is just around that 2,400 mark.
Okay, meantime, you also have a fresh brokerage note on Hindalco this morning from JP Morgan. They've maintained an overweight rating, a 490 rupee target price, saying that the near-term earnings should improve, though they've cut the FY24-25 EPS by 8 to 10%, building in lower LME. Hindalco is the stock that I'm flagging off. JP Morgan also saying that they expect capex to be aligned with the cash flow. Sanjiv, where do you stand when it comes to the metals basket?
Very bullish. Avan, last time the yields went to 3.8, you hit 115 on the dollar. This time the dollar is on the verge of breaking 100 levels. And if it comes to 98, Hindalco will be flying to 500. So also coke prices have softened a lot. So both the steel basket, that is Tata Steel and JSW, and Hindalco. Also you can add a SAIL and a Jindal. So if you buy that whole basket or buy a fund which has metals over there, metals are going to rule the roost at least in the next 3 months. And I think the valuations are now very, very reasonable given the earnings opportunity and the China reopening. That is going to be the real kicker for metals and banks and that whole proxy which I told you. But Hindalco is a must-have around these prices. Along with that, include a JSW Steel, which I think can be a huge outperformer.
Okay. Meanwhile, Naresh, within the cement space, what would be your strategy?
So out here, Ultratech Cement has been on radar because technically the stock has been shaping up for a breakout above that 7,400, 7,500 mark. If you look at the last 4 months, there have been 3 tops around that 73 to 7,500 zone. Every time it has been a little higher. If this breaks out, this could go towards 8,000 levels. And the stock has been showing relative resilience. So Ultratech Cement is one. And second is Ambuja Cements. The stock has made a strong base around 330. The last bottom at 350. So it's starting to make higher bottoms. It's forming a triangle out here. Once it crosses 385, that would be a short-term breakout. And even at current levels, that is a stock one could be looking to buy at dips with a stop loss at 350. So would go with Ultratech and Ambuja Cements.
Look at some of the movers for the week gone by. So pull up the 7-day chart or the 1-week chart of some of these stocks. Adani Green has seen a smart gain of about 26% or so. But then there's been something like an Anupam Rasaya, and that stock as well has gained pretty smartly for the week gone by. Aarti Drugs, another smart mover, currently at about 373 rupees. The week has been pretty healthy for this one. You've also had an Angel one, which has seen a double-digit gain. Along with that, a JBM Auto. On the flip side, though, Sobha has had it a bit rough, nearly 17% being shaved off for this week. There's been an IRB Infra as well. It's been a bit choppy, down nearly 8%. HAL, we just flagged off that stock as a newsmaker, and for the week gone by, after all the give and take, it's lost out about 8% or so. Kunal, let's get in a take on the charts then. Something like an Angel one, maybe Anupam Rasayan, if you track that one, a JBM Auto, basis the kind of run-up that we've seen this week.
So Angel one is interesting because the stock has formed a classical double bottom on the recent charts. So I think the month of February and March, just the first couple of days of the month of March, the stock formed a low which was almost at the exact 1000 odd levels, managed to rise up to 1120, 1140. Second retest was just about a few trading sessions back at the 1000 mark, and then today the stock is back again above that 1120 mark, which means it's a classical double bottom at play for Angel One, and this generally indicates that a major bottom could be at place for the stock. So 1000 could be a major support, and for traders who are looking out to build long positions can keep that support or a stop loss and look out for building long positions. Even if the stock goes into a mean retracement or a mean reversion towards its 200 DMA, we could expect 1300, 1350, which is the 200-day moving average, as a near-term target for Angel One.
All right. Well, Sanjiv Bhasin Saab, brokerages, is it a good time to buy them? I read a report that retail brokerages and retail activity is down 50%. Kunal Bhai is saying buy Angel One. What is the reality at IIFL?
Well, yes, there is sluggishness. A lot of the large part of the portion has diverted to derivatives and options, and people are a little bit on the the low volume side. But I think it's a passing storm. As a disclosure, I cannot name our stock. I have options, but I am very bullish on the industry as a whole, because the intermediary phase of more and more funds or the route of brokerages are getting even more, and cross-selling is picking up very, very dynamically. So I would be very, very bullish on this industry if you have a 2-3 year view. In the near term, yes, like you said, there could be operational costs which can eat into margins.
ICICI Securities, Engine One, when they were the haloed stocks. Trust me, they were the haloed stocks of 2021. Number of demat accounts were opening. The PMS activity was opening higher. IPOs were flying high. So they had this huge patch of extraordinary return and extraordinary growth. I want to go back to your stock ideas, Bhasin Saab. You like HCL Tech, which is cheap, but it is growing at a run rate which is higher than the industry average. But you also like LTTS, right? Apart from Tech Mahindra, you also like LTTS, right?
LTIM.
LTIM, sorry.
LTIM, yes.
Yeah.
The Mindtree pedigree and the type of businesses and the merger are huge. I think LTIM is a flyer from here. So LTIM, HCL Tech, Tech Mahindra, if you recall, Nikunj, in my December when I had the show with you, I very, very vehemently suggested that closer to 1020. Then it's 2 to 1120 on the change of management. And I think that change of guard will play out well. But LTIM, HCL Tech and Tech Mahindra, these three are going to be outperformers.
Okay. These are a couple of stocks which are in focus. Well, Vedanta, given all the news flow around it and the management denial coming in yesterday that they're not looking at a stake sale, the stock didn't see any much of a recovery play by yesterday as well. Now they've got a board meeting coming up next week on 28th, which is Tuesday, to consider the 5th interim dividend. So let's see which way this stock actually heads from there. BEL, we were just chatting with Sanjiv about HAL, and he says that the OFS, given that the retail book is going to open today, it's a thumping subscribe. BEL as well is a stock that he likes, and it's backed 2 contracts from the Ministry of Defence worth about 3,800 crore rupees. So sizable order coming their way. That's BEL in trade for you. Kunal, just very quickly on the charts for just a HAL and BEL, if you had to pick one to go long on, which one would it be?
So off late, I think BEL has shown a lot more consistency around this 1992 mark. That's a strong support zone for BEL. HAL is still yet to tap back into its strong support zone at this 2,400 mark. So maybe the stock corrects by another 4% from yesterday's closing, then it becomes attractive. But I think BEL at current levels, price-wise, looks at a very attractive zone.
Okay. Pre-open rates. In the morning when we walked up to trade, when we walked into the office, SGX was down, but there is a mild recovery there. Now, what is important here is that the dollar index is now below 103. That is something which will have long-term and medium-term implications. The dollar goes down, emerging markets go higher. This time, dollar is going down and commodity prices are not going higher, and that is excellent news, because if historically dollar weakness has always coincided with strength in commodity. But since you're coming off the base on inflation, this time the dollar strength may actually translate into more strength for emerging market equities. So we can argue about the attractiveness and the entry points about a market like India. But if you stretch the timeline, start counting in terms of quarters and years, then even today also, if you invest for next 3 to 5 years, I'm absolutely clear that markets will create wealth for you. What happens in the short term is a function of technical sentiment, global pressure, macro. You put all that factors together, obviously the near term will look slightly more volatile and uncertain. There is intense volatility in global markets, which will surely have impact on Indian markets, per se. Bhasin sir, why do you like PSU banks? I mean, PSU banks are cheap, credit growth is strong, but they're also struggling. They're struggling because they are not getting deposits. They're struggling because they're losing talent. They're struggling because they are not the first port of call in terms of in terms of technology and customer experience.
Well, you've seen how they manage their market share. CASA ratios are strong, and I think they from the management which I've met, PNB and Can Bank, they said we are sitting on cash. We don't need. Look at the type of credit growth. Plus, they've taken a large part of the market share in the credit side, on the retail side. They are also doing extremely well on the MSME side. So, it's a whole basket that these stocks were underperformers for 5 years. Now they've been through this consolidation. But I think that given that now technology has taken away costs, pension funds are seeing less people on the floor. And I think that their reach, you go to any city or town, I travel pan-India, you'll be amazed at the branch network and the facilities now. I think there is a new realm of how people have changed. Look at how Bank of Baroda and the others have, started to change into the timeline of private banks. So no two ways. If you are looking for wealth creation, PSU banks are going to continue to do that, at least in the next 2 years, till we see some wave of NPA cycles and so on, which will obviously be there in a hindsight. But right now, on a valuation basis, the book, the CASAs, they are all giving you very good entry points.
163 for Bank of Baroda. Nuresh, which is the strongest PSU bank? They're still up 50%. They may be off 20% from the recent high, but they're still up 50-60% in last 1 year. Sanjiv साहब ऊपर क्या देख रहे हो? I saw you staring at the screen. TV ऊपर क्या देख रहे हो?
Looking at you.
आपको देख रहा हूँ, आपको फोटो देखता हूँ ना.
अरे सर सामने देखो, मैं दिख जाऊंगा. ऊपर नहीं हूँ मैं, नीचे ही हूँ.
अरे सामने आपने ईटी नाव लगाया है ना, आयशा दिख रही है ना, आवाज दिख रही है, और हमारा तो बर्थ है, तो अच्छी सूरत दिख जाए तो शेयर बाजार भी अच्छा चल जाए.
चलिए, Nuresh.
So all the PSU banks have now corrected a good 15-20% from the top and have started making a base. So all the charts look pretty similar. So SBI has corrected from 600 to 510, a Bank of Baroda from 195, 200 to 160, a Canara Bank from 340 to 280. So all are making a base and are very critically placed at the support level. So from here, there should be a bounce, or if this breaks down, we would get into a little more correction. But as of now, we are seeing that supports hold on. So till the time we are above 500, SBI still looks the most risk reward buy. Same is the case with Bank of Baroda. Till it holds above 150, 155, still looks interesting. So all the three as a basket look pretty promising.
Okay, Sanjiv, great to have you on the show and hope you have a good trading day, pretty face or not. Let's just revisit what the market rates are settling in at in the pre-open rates. And it seems like it's going to be once again, one of those tempered days. 17,035 thereabouts is where the Nifty is. A lot of stocks which are going to be active, but that we will address in just a second. First, let's get you some mid-cap trading ideas. Kunal, what's on your list?
So Naveen Fluorine is one of the stocks which looks attractive on the charts, trading above the 200 moving average, forming a bullish flag pattern on the daily time frame charts, trading above that breakout point of this bullish flag pattern around the 40 to 50 mark. So would suggest a buy with 4,400 as a target, stop loss at 41.50.
Right. Naresh, what about your ideas?
So that would be a buy on KEC International. The stock has been holding on above the 450 mark for the last 4 months. A base has been made. Stock is shaping up for a longer term breakout. In the near term, a short term breakout if it can sustain above 490. Yesterday was a little bit of a price and volume jump. So preempting it here, a stop loss at 460 and a target price of 550.